Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now as we start the week, there's a few things to digest. All right, now Japan, the government's come out and downgraded the Q1 GDP. Okay, this is a bit of a surprise to the market. The dollar, I'll show you the charts in a second. Dollar yen has rallied like a weaker yen, basically just shows how fragile that Japanese economy is. And you know what? Sort of rules out any chance of BOJ intervention at this point because the data suggests the yen should be weaker. Right now, one other thing that you may see on the charts, the euro, it's like a bit of a gap in the market, right? Euro's up. And let me just give you a look at the charts to make the explanation a bit easier. We are seeing that, the far right have won the first round of election results in France, okay? And there's been weakness since Macron sort of said they're going to have this snap election. The results came out, but they weren't they weren't great, right? For the far right, they got a lead, but only slightly. So if anything, it's a bit of a relief rally, and you can see that gap in the dollar index. Of course, euro being 58% of the basket, you'd expect that. But have a look at sterling, Aussie, and Kiwi, right? These four instruments at the bottom here all correlate together, and they aren't going with it. This is an isolated euro event, right? There's no sort of flow-on effect. And just on that, you can see here, dollar yen sort of cruising topside above 161 now. Now, 160 was the trigger for the BOJ before. They've got to let this GDP revision sort of run through the market before they think about intervening. Otherwise, the market's just going to swallow up the dollars they've got on offer. Now, let's just piece this together because there's a couple of things to sort of consider. Now, if you come back to Friday's numbers, right, in the US, the PCE price index. Now, on the big scheme of things, as far as a market-moving event, it didn't really do much. But the number, okay, month-on-month, 0.1, and year-on-year, 2.6. Let me just clear that screen up so you can see that a bit better. So these were the two major numbers. These are the outcomes we got. Now, they were right on expectations. That's why we didn't see a big shakedown in the dollar. But this is what the Fed looks at. They look at the prior numbers and go, righto, prior was 0.2. Right, that's lower, 0.1 month on month, 2.6 year on year. That's also lower. So in the big scheme of things that the Fed looks at, this pushes the Fed a little bit closer towards maybe earlier rate cuts than otherwise thought. Right, the CPI numbers were weaker. We're now getting the PCE price index weaker. The numbers are starting to add up for the US economy. I wouldn't be surprised to see an earlier rate cut out of the Fed, or at least a shift in the market towards that. All right, so there's a bunch of things going on, right? There's so when you come back and you look at your charts and you think, well, what can I sort of do here? Now, Mondays is always a good time to redo your charts and sort of recalibrate any weekend news. So you've got sort of basically weaker inflation numbers in the US. We've got the that French, sort of first round of election results. Yeah, sure, they're supporting the far right, but not as convincing as otherwise thought. So that sends euro up. We've got dollar yen going up on a revised GDP number by the government. And the rest of the instruments, well, they're just sitting tight, right? Just trying to work out what's going on. Traders across the Asian zone will be sort of trying to assess here, what's fair value here just at the moment after the weekend. Right. And then now let's get into what the week has for us. Now, there's some manufacturing numbers here coming out of China, right? Important for the Aussie and Kiwi traders. Some early inflation numbers here out of Germany on Monday. The Germans got through the Euros, as did by the skin of their teeth the England. Interesting to see that. The ISM manufacturing numbers now, just keep an eye on this number here as we go through Monday's trading, because this number here has propelled the dollar into action in the past. So to make sure you keep an eye on that. I'd like to see these inflation numbers come on Tuesday. To me, now that we're starting to see the euro starting to move, this is where those inflation numbers can really come into play, right? I'll be taking a very close look at those. We've got Powell speaking, the JOLTS job openings on Tuesday. You come through into Wednesday, and it's the ISM services data. Okay, non-manufacturing PMI number is the other name for that. That's also very good. You got the FOMC minutes. see if there's anything hiding under the blankets at the Fed. And then you come into Thursday, not a huge amount on offer. The ECB monetary policy meeting accounts. Okay, outside of those meetings they do release various discussions that they're having. Right now, it's not often that they change things, but it's well worth having a look. And don't forget the Swiss inflation numbers. Now they're usually very close to the mark, but if we do see some change there, it may be quite interesting. Coming to Friday, you've got the monthly head kicker, and that's the non-farm payrolls. Unfortunately, this month we've got the Canadian employment numbers as well. Now, for those traders who aren't familiar with that, every second month the Canadian numbers are by themselves, and every obviously alternative ones, you've got the US and Canadian employment numbers coming out at the same time. It's a dog's breakfast, right? It is an absolute mess. But you know what? With those PCE price index numbers coming out last week, I tell you what, weaker numbers here really does put the cat amongst the pigeon and can really put further pressure on the downside in the dollar. We want to see continued weakness in the US numbers because it builds up structure for the plan for the Fed and us. It gives us a weaker dollar trend. If these numbers come out stronger, it just counteracts the weaker numbers, and we're going up and down, and you're not getting a continued price action there. Traders are, like I've spoken to a lot of my mates who are still at the banks. They are extremely frustrated with the lack of trends. They're trying to sit on their hands, but they're getting frustrated. They'll be looking for these numbers here to see if there is further weakness across the board in the US economy. Don't forget the Fed was signaling that, they were looking very closely at employment as another catalyst, obviously with the inflation numbers. And that's where we are at the moment, right? So when you come back and look at the markets, plan out your week, right? Some of these numbers will give us ideas around where specific currencies are going. Don't forget, as I explained, we're factoring in the weekend news. Then you can come back, start to look at the markets each day and get some bearing around where the price action is coming from, right? At the moment, we've got US equity futures up. We are seeing a bit of a risk-on day there. Euro, sterling, Aussie, Kiwi up and the dollar down. But I tell you what, there's a good reason for the Swiss and the yen. Well, they're up as well, right? So the little bit of a dollar move here to the top side. But we are seeing Euro, sterling, Aussie, Kiwi come back. You'd expect sterling, Aussie, Kiwi to rally a little bit with that move in Euro, right? So, and you can see here, Euro's rallying against all crosses. And that's pretty much all we can look at the moment, right? Get yourself prepared. And just coming back to those interest rate probabilities, right? You start to look at the Fed here. Okay, no change expected at the next meeting. Cut, well, 0.25. It's at 12% at this stage. So we'll see how that goes through the course of the week, probably especially after the non-farm payrolls. See if we start to see the weaker numbers, put further pressure on the probability that the Fed will cut sooner than later. And that can be where things are from here, all right? At the moment, you've got a bit of a line ball decision here with a bunch of central banks. Okay, the Reserve Bank of Australia, a hike, 0.25%, 65% factored in, right? That's why the Aussie is going well on the crosses. You look at the Bank of England, the Swiss National Bank, cuts, well, not quite 60% there, probability of a cut, but it's getting closer. And we'll see how this plays out, because now we're starting to see the data really impact some of these central banks. And that's where the good trading opportunities stem from, getting onto those and then giving us a trend in those specific instruments, right? We've been shortchanged this year so far on trending markets, but I can start to feel, the worm has turned. The dollar numbers, weakness this week really gives us a good opportunity to start selling dollars across the board. And then we can factor in or overlay, Euro, sterling, Aussie, Kiwi, CAD and Swiss and the yen on top of those. And hopefully we should be able to pick the eyes out of it. All right, guys, that's it from me. It's a bit of an interesting week coming up. We'll see how it plays out. Good luck and happy trading.